Hello, and welcome to our daily forecast video. Today's Tuesday, and we are going to analyze the gold market. Okay, before I check what happened today, I would like to show you yesterday, around the New York session, we can see this kind of setup. If you saw my yesterday's daily forecast, I mentioned clearly that we can enter the market if the price breaks that sell zone. Okay, that happened around the New York session after the market created that 1-hour bullish candle. You can see there are too many fair value gaps, around 3 or 4 fair value gaps, but the price only touched the top fair value gap. That is the main reason some people were not able to enter that market, because there was some risk. Okay, but when you see these kinds of rapid movements, sometimes the price could go further up. Okay, I also entered the market because you can see there are 2 confirmations to enter the market. The first one is that the fair value gap is broken, but there's no real break. The wick just touched, and the price did not end below the fair value gap, but ended on top of and above it. That is a good signal to enter the market. Okay, that's why I entered the market, but I only set a very small stop loss because there was some risk involved since the price could come down again. As you can see, there are a couple of fair value gaps below that order. Also, if you check in the 1-hour chart, you can see the EMA lines are also below that. The 20 EMA in the 1-hour chart is also below that line. Therefore, that is a little bit risky and not a 100% confirmed order. Anyway, I was able to get around 600 pips from this order, okay? After that, we can see in the today morning, the price came down, but I was not able to enter the market because I am not interested to sell in this market. That is the thing that I also mentioned yesterday. I do not like to enter the market as a seller. Okay, now we will check today's chart and let's see what could happen today. Okay, first of all, I would like to draw support and resistance. Sorry. Before that, I will delete all the zones. I'll keep these 2 zones because we will need them. You can see there are 2 support and resistance lines that were drawn in earlier days, and we can't see any new support or resistance lines. Therefore, I will keep these lines the same and will not draw new ones. Okay, now I am going to draw the buying and selling zones. We already have 2 buying and selling zones that were drawn yesterday. Also, I would like to draw another buy zone around this wick. There was a big rapid movement that happened with that wick. Therefore, I'll keep and draw this as a buy zone. Okay, the price already touched that area, so we have to keep watching that. Okay, after that, I am going to draw the sell zone that was on top of that channel. This is the only sell zone that we can find in this bullish market, but I am not interested to sell there. I'll only use that area to enter the market if the price breaks up and retests. Okay, these are the 3 buy zones and sell zones that I can find on the 4-hour chart. Now I'm going to the 1-hour chart and will do any customizations to the zones if needed. In the sell zone, I would like to make some adjustments with that bullish candle in the 1-hour chart. That is our first sell zone. I'll make the adjustment with that. Also, I would like to draw another sell zone with that bearish candle created yesterday, because that could be an area later when we access the market. I will keep that buy zone we drew, and also these 2 zones. Okay, these are the buying and selling zones that we can find in today's market. Now I'm going to draw the buying and selling structures. Okay, you can see the current price is just below the 4-hour 20 EMA. Sometimes it could be another liquidity grab and go upward, or if not, then it could be another move downward. Okay, I'm going to draw the setups using the 1-hour chart. The first setup I can expect today is around that zone the current price is touching. If you can see upward movement with a 1-hour bullish candle, then go to the 15-minute chart after the end of that candle, then find the fair value gap, and wait until the price touches the wick in the 15-minute chart. Then you can enter the market with the first take profit at this sell zone and the second take profit at the top sell zone. This is the most, probably the most high probability setup I can see, okay? Also, if the price does not come down there, then we can enter the market in this area. There is a support line, and also you can see the 150 EMA is just below that. The upper price could touch that, and after grabbing the liquidity, you can enter the market with a bullish 1-hour candle and hold the position as much as you like, because the price could go further up to that line touching the 4-hour chart, 50 EMA. These are the two most possible setups that I can see in today's market. After that, you can enter later if you can see the price break up through that sell zone. Okay, before you enter the market, you should check the confirmations in the 15-minute chart and compare the price with the EMAs, especially if you can see the price drop below the liquidity and the EMA, then there is a good chance to enter the market. Okay, these are the things that I would like to show you today. So if you like my videos and would like to see more, then please subscribe and leave a comment about your ideas and share my videos. Thank you very much, and see you tomorrow.